Hey guys, today with GammaEdge here. Wanted to come at you with a trade recap from yesterday on 3/14. Did record an intraday video, just an update on when the trade was taken and what I was looking at, so you can go back and review that. But here I just wanted to kind of close the loop and what ultimately happened in the trade. But before getting into it, I want to run through our pre-market prep routine real quick, just so you understand how we identified the levels and the zones we did. And again, this is specific to SPX 0DT type trading, although note I did execute through futures. So here's the SPX 0DT dashboard. We do annotate it in the morning for the members just so they can understand where the key zones are at. I know there's a lot going on here, but the thing I want you to focus on is the blue box, which is our DEX transition zone, and the yellow box, which is our drunken sailor zone. Both you'll see in a minute on the chart itself played a pretty big role in price action today. You can effectively think of both of these zones as where we expect chop action. Reason for that is because sentiment between call and put speculators is mixed. As shown with the net OI column here, you can see how those dominant strikes kind of flip back and forth between green and red. So this is where intraday volume and the opening and closing and transactions plays a lot bigger role than, kind of dealer market maker dynamics. However, once we break either to the upside or the downside of these zones, this is where we expect the moneyness of the options in the decaying and the limiting to 0 and 1 respectively start to have a greater impact on price itself, along with the opening and closing of transactions too. So going to the chart itself, I do have the entries and exits marked. We'll get to those in a second, but first I want to focus on the zones. So this yellow zone right here, that's the drunken sailor zone. The blue zone here is the DEX delta transition zone. You can see that there is overlap or confluence between those zones. So starting out today, obviously we got the gap up. Volatility started coming out of the market. So on an intraday basis, was slightly bullish. Another reason is we were not losing the opening print, which I personally like to use as kind of a sentiment gauge on the day as well. So above opening print, I tend to be a little bit more bullish. Below opening print, I tend to be a little bit more bearish, but that's just me personally, not necessarily a GammaEdge view, because we were just specifically focused on the options market, right? And this is kind of where me as a trader, I found things that I like to overlay with the GammaEdge tools as well. Right, so from there, held VWAP, and then we got this nice move of a VWAP to the top of the DEX transition zone. However, I wasn't interested in trading this rip because it was pretty much, kind of like a V bottom straight up to the top of the zone. So I was looking for a pullback. During this time, I also want to hit on our momentum models because those are critically important for our intraday bias as well. So this is the market trend model. Here we're looking at the cumulative tick, which you can see right here is this bolded white line. So this just represents, this is built off the tick index, right? So it's just a representation of real-time buying and selling in the market. When there's buying an uptick, selling there's a downtick, and we just create a time series of this. So you can see coming into the day, I mean, the whole week was just a downtrend, right? But we did get that reversal off the open. We saw some significant buying coming in throughout the session, which is our filter tick, which is this cyan line, which is only reads when we get plus or minus 1,000 ticks, which is an accepted benchmark by the market as a whole. So that's why we track it. So again, throughout the day, we could see linear update with the cumulative tick, linear update with the filter tick. So again, this kind of helped with our bullish bias on an intraday basis. Additionally, what I want to hit on is our intraday volume model, which is kind of intraday momentum model, right? Which is nice confluence with the market trend model. So what this is we look at intraday volume for the SPX 0DT contract. The green section over here, this is the call side, and the red side is the put side. So what we're doing here is we are looking, we call this the bolded lines. These are the Centroid lines. What you can think of there is every 5 minutes, what we're doing is we're taking all the volume data on the call side and we're aggregating it, looking at the distribution and finding out kind of where the middle point of that distribution is. Same thing on the put side. And what we're doing is we're plotting those points every 5 minutes. We're connecting the dots for you so we can kind of look at what the trends and those centroids have been throughout the session. Again, this kind of helps us understand kind of where speculators, the trend of speculation throughout the section, because that trend in speculation represents sentiment. So if we can understand how those speculators have been transacting up until any specific point in time, we can understand, all things equal, how they are likely to transact going throughout the session. So at this point in time, around noon, what we can see is there's an aggressive move up in the put centroids. Call centroids a little bit higher, but kind of relatively flat. So what this tells us is, puts are being closed, which is kind of giving us a lift in the market while the call side is not being aggressive. So this kind of puts a cap on the top of the market until we see kind of an aggressive ramp higher in the calls. And so what we saw throughout the rest of the session is that the put side continued to ramp higher. However, the call side was relatively flat. And so, kind of during the afternoon in the Discord, we were talking about this observation, how we were not seeing this call side progress higher. However, we were not seeing this put side, weaken at all to the downside. So again, this kind of put a floor under the market to where we weren't expecting, a collapse, but we all weren't also expecting a ramp because we weren't seeing that upside call speculation. So the thought there was kind of sideways to higher price action. So again, this tool is useful because with that context of what we're expecting to happen in the close, that can help us to inform butterflies, help us to inform, kind of the, selling above and below, kind of where our lines of best fit are pointing towards to where spot price could close. So getting to the trade itself now, again, after we broke the VWAP, we were above the opening print here. There's VWAP, then we got that nice push higher. So from this point here, I'm obviously bullish on the market again because the volatility was collapsing throughout the session, which is good to see. And so really what I'm looking at this point is a retest, some kind of higher low being formed. And so right here, we can see that higher low happening right at the top of our DEX, right at the top of our drunken sailor transition zone, which is exactly the price action that we expect to see. If that did fail, then that would be an expectation breaker. So this is a great spot for risk to reward because again, risking a little, we know where our stop is going to be, a failure below that level. And so that's exactly what I did. So yeah, as soon as we held here, I took a long entry. And keep in mind, I did not have great expectations for this trade because remember vol M in the Centroid chart, the call speculation was flat on the day, so we weren't seeing that expansion higher. So I was not expecting to really get like a huge ramp in this trade. So with that thought process, the risk to reward was not excellent on the day, but I also was not too scared of downside because remember the put Centroid was trending higher on the day. Further, we were seeing the market trend model move constructively up all day. So that kind of told me that there's a bit of tailwinds in the market as well. So again, right from there, I mean, it's basically just, entering the trade, respecting your stops and just letting price action play out. So we got that nice push higher, set it a new high of the day. Then we, checked back. We remained above the top of the drunken sailor range. VWAP was continuing to trend higher as well. So there was really no reason to exit this trade. And then again, we started progressing higher. Ultimately, when we set a new high of the day, I took the trade off. Reason being is we were getting towards the end of the session and, crazy stuff can happen at the end of the session. So I didn't really want to get caught up in that. Looks like, it worked out in the favor of the bulls today, but it could have easily collapsed. You never know. And then second was, again, Centroids were not showing any material advance higher. So, I was just thinking, why do you think this is going to go higher? Just take, the nice profits. I don't know, it's 10 to 15 ES points. So, pretty good trade. And with that, yeah, I was happy, one trade on the day, profitable trade, all good. For what it's worth, we were talking about this in real time in Discord all day. So, yeah, if you're a lone wolf out there looking for a community, this is kind of what we do all day. Candidly, have not been doing a ton of this, but going to make a more concentrated effort to, talk to the community and whatnot throughout the session. In hindsight, we were talking about this break above VWAP when it happened. Obviously, this was, in hindsight, a great trade, not only because of the price action, but because, remember, we did have tailwinds in the market, right? We were moving higher here. The vol M at the was, looking constructive. We were seeing a bit of ramp in the call side. The put side was certainly ramping. So at a bare minimum, if you're bullish, you want to see this put side ramping higher. And then from then, right, we're above opening print, we're above VWAP. Both are kind of key intraday sentiment indicators that I like to use. So, again, that was a great trade. And you could have rode it up to the top of the drunken sailor, top of the DEX transition zone, and then from there reassessed. But nonetheless, I didn't do it wrong either by waiting until we cleared the top of the drunken sailor zone, then waiting for that retest, and then moving modestly higher from there. So hopefully you guys found it helpful. Let me know in the comments if you did. Happy to do more of these. It's really just good kind of trade reflection for myself as well. So I should be doing it anyways. So with that, y'all have a great weekend and we'll talk to you later. Bye.